Nigeria can be a very challenging market, but these challenges can be offset by better knowledge of the local market as well as precise contracts and engagement of knowledgeable local partners. That's according to the findings from an investment survey by the Nigerians in the Square Mile. Joining us in the studio is Gbite Oduneye, Managing Director, Eagle Capital Markets, and via Skype we have Ikenna Iroche, Executive Member, NISM. It's great to have you both on the show with us. Let's start with you, Gbite. So obviously your findings are here, and I guess a good place to start, you could run through the good things that investors, especially maybe foreign investors, are saying about Nigeria, and also the bad.
Well, again, thank you very much for having me, Didi. It's always a pleasure to be here. The survey was conducted towards the latter end of last year by Nigerians in the Square Mile. It's an association of Nigerian professionals based in the City of London, and they asked 41 investment managers as well as transaction advisors on their experiences in Nigeria. As we all know, the general, the good on what people are saying about Nigeria is that it's one of the more exciting frontier markets. Mark Mobius, for example, believes it's one of the places in Africa where one could generate very, very decent returns. GE, for example, have invested close to $1 billion in the Nigerian market. Now, those are some of the, the really good, the great things which we hear. Obviously, the bad ones, which is JP Morgan removing us from the bond index. We have Buhari, our president, who has refused to devalue for whatever reason, be it good or bad. We then have the Nigerian stocks, of course, at the lowest that they've been for quite a while. We had the Boko Haram issue in the northern parts of the country, and the one that we can't escape, which is our dwindling revenue in oil. So although there's a lot of good things which are going for us, we do have some negatives. Now, instead of us jumping into conclusions, what we did was that we asked comprehensively these people who do invest in Nigeria a number of specific questions, and they gave very detailed answers to our questions. All
right, so let's bring you in, Ikenna. Let's take a look at some of your key findings. Obviously, we're talking about the low oil price environment, and then you're saying here that investors are largely undaunted by this. So I guess I found that particularly surprising. Some things that were not too surprising there. First-time investors are finding Nigeria to be a very challenging market. I can imagine that. So let's run through those key findings for us, Ikenna.
Okay. Well, like you said, the oil thing, the oil price hasn't really been a daunting factor. If you ask yourself, why would an investor be looking at a country like Nigeria, the primary reason is growth. So an emerging market investor is always looking for growth dynamics. Nigeria is part of the African growth story, and Nigeria is the biggest African country. So that is the primary reason, primary appeal. The whole point of the survey was to try and get away from all the rhetoric and get real hard facts as to the people who are putting their capital where their mouths are, or what are they finding to be the challenges. So for an emerging market investor, unless they're an oil investor specifically and wanting to get returns from an oil investment, the oil price really doesn't affect them unless it has knock-on effects to other issues. What these guys were telling us is their main challenges are things that create uncertainty for them in either entering the investment or at the time they're thinking about exiting. So high volatility in exchange rates, unclarity about policy consistency, macroeconomic policy consistency, those were kind of the key findings. So to summarize very quickly, Nigeria is a very attractive market, but one that can be difficult to transact in, and policy instability, exchange rate volatility are the two biggest headaches these people find.
All right, over to you now, Gbite. Obviously, perhaps you could talk about Nigeria, compare Nigeria to other countries, perhaps maybe other emerging markets in regards to the execution, difficulty in executing.
Well, what we found from the questions which we asked were on various of transaction, Nigeria scored 27%. unreasonably complicated, meaning a number of them found it to be unreasonably complicated. That was 18%. More complicated was 55%. And obviously, we didn't have straightforward and not difficult. But what we also found was that that was on their first transaction. When it came to their second transaction, that improved significantly. We do find that what a number of them are saying is the local advisors on ground who they deal with are, second to none. So they have no issues at all with that. I think it's the general infrastructure and the fact that they're dealing in a frontier market which they haven't dealt with before. Also, something which we found to be very interesting was, considering that the survey was just done by London fund managers, that 35% of them, a fifth of them, had at least 35% of their investment portfolios invested in Nigeria. We also, they also responded saying that they would look to increase that considerably as time went on. So bearing in mind that we do have all these difficulties that do exist, the major issue was not, which we found a bit surprising, was not terrorism actually. It was, as Ikenna rightfully said, political and economic instability. Compared to other emerging markets, it does still seem like a very exciting place if we can get our policy right. But we did find a number of, there were some issues, for example, which we thought was, amazing. Well, with regards to their appetites, it has not changed or has not dwindled. They just think there could be better transparency with regards to our policy and our direction, but the interest is still very much there, very much interested.
Ikenna, now it's interesting when I look at this, and it says it's good to see that Ghana is the top country when you think of the number of investors with fresh investments in Africa since 2008, so 7 on there. But surprising that Nigeria is not on this list at all.
Okay, so to explain that particular statistic, what we did was, this is an investment survey about Nigeria. But the point, Nigerians in Square Mile is obviously a pro-Nigeria organization. So what we were looking at is, with people we talk to want to invest in emerging and frontier markets, frontier economies. But so Nigeria needs to be competing against these guys. We need to know who our competition is. So what that statistic shows you is actually where else are these people investing in addition to Nigeria. So of the people we spoke to, Ghana was the highest number, or the most frequent destination for investment for these same group of investors. So they're putting investment dollars into Nigeria and into Ghana and then all of the other countries on that list. So does that clarify that?
So what is so attractive about Ghana? What is so attractive about Ghana then, for investors?
So the demographics are similar to Nigeria in terms of the long-term growth story. But actually, banging on the same drum again, Ghana has been seen for a long time as a much easier place to do business. So, the infrastructure challenges are less, but also the government's macro policy more recently has been deemed to be more friendly to investors, i.e. more predictable. And as an investor, especially one who is a long-term investor, one of your biggest issues is predictability of outcomes. So if I put my money in today, is the policy going to change in 18 months that maybe halves the value of my investment, or perhaps even completely wipes it out? So Ghana is attractive because as a foreign investor, it's slightly easier for them to get things done.
And let's get some final comments from you, Gbite. Obviously, you've drawn some conclusions here, and I just want to refer you to this new story I read at the start of the capital importation report, showing that we've seen a 74% decline. And as I read there, it's linked to the fact that investors are finding it difficult to take out their money. So obviously, if they bring in money, how do they get it out? So talk a little bit about that. Perhaps you're not surprised by those figures that came through, and perhaps conclude for us.
Okay. Well, obviously, the difficult thing is our currency. It's all again related to the oil price, because we don't have the foreign currency for them to pull out, it's becoming difficult, extremely difficult. As I can hear the gentleman saying we should wrap up, there are a couple of key things which we found, and this is perceptions of people before they entered the market and perceptions after they entered. So initially, before they entered the market, a number of foreign investors thought it would be difficult. Now, we're finding that they're saying it's a core market for them. A lot of opportunity is what they said before they entered. Now that they've been in and they've been in for a while, that has still not changed. And before they entered, a difficult place to navigate. Now we're increasing our exposure in Nigeria, is what investors are saying. Before they entered, it's an opportunity. Now that they're in, I like Nigeria more and more every day, is what they've said. Again, it stays as an enormous opportunity. The interest in Nigeria has not changed.
All right, let's leave it there. Thanks so much, Gbite Oduneye, Managing Director, Eagle Capital Markets, and Ikenna Iroche. Thank you, Ikenna, as well, Executive Member, NISM.